Hello everyone, this is Ross Garcia with the Loan Modification Clinic, and today I want to give you 3 different types of scenarios and what could happen with your loan modification when you start the process. Now we know that there is a depression coming. It's basically already here. It takes about 2 hours just to go get some food, right? So as you're forming line, they're telling you got to wear a mask. I got my mask here, and you just have to take precautionary measures, okay? Now we're going into what if scenarios. Why I'm telling you these different type of scenarios. Scenario number one is you owe $250,000 on your house, and they tell you, well, you had a 5%, we're going to give you a 3%. Now, let's just say escrow, what you're paying in taxes and insurance is, and I'll just put taxes and insurance up here, and your escrow is $565. This includes taxes and insurance. So whatever the calculation of this payment, and I'll just tell you guys the calculation on a payment of $250,000 with a 3% interest rate, and we'll base this on 30 years. Now, let's just say we'll go into what your payment was originally, but this is a 3%, right? Now, originally you had a 5.5, so your payment was actually the old payment. I'll just put here old payments was $1,419, and you could do this yourself. You could download the calculator, Carl's Mortgage Calculator. Then you just put the escrow. If you have an Android app, you could download Carl's Mortgage Calculator with the K. Now, this is a 5% rate based on $250,000. So this is what you were paying before this recession. So you're paying $1,419 plus the escrow of $565, okay? So we'll add 565 here as well. This is not difficult, guys. This is not difficult at all. So your old payment before you started in this was $1,419 plus your escrow of $565 gives you a payment of $1,984. Okay. I'll just leave it $1,984 even. Okay. So you guys don't get confused on that. And you modified it. This is option number one. I'll put option number one. You got the 3%. $1,619. Then you're saving right here. You're saving. You subtract $1,619 minus $1,984. So this is option number one. So I'll just put option one, right? You're gonna save $365 a month, okay, monthly. Now, if you average it out to 30 years, you're talking about $131,000 that you're gonna save in the duration of the loan. Now, this is option number one. What happens with option number two? How does option number two come in? Well, option number two is they say, okay, you know what? We're in a depression. We're going to give you a new loan of $180,000, and we're gonna put, because you still owe the $250, we're gonna put the 50, which is 50 plus 20 to get to 200. So we're gonna put 70,000 at the end of your loan in the form of a balloon payment with no interest. Okay, so this is the balloon. This goes at the end of your loan with no interest. So you don't have to worry about that. So 180,000, and they give you the same rate, 3%. The rates could be lower by the time this is all said and done because Donald Trump has to give a stimulus. Okay, so 180,000, 3%, 30 years. Now you're saying, oh, well, I've been paying the house for 5 years. Don't worry, we'll get to that right now. So 180,000, 3%, the payment $758. We do the same thing. We add your taxes and insurance, 568, 565. Now, by the time this is all said and done, you know, your payment's gonna be a lot lower, because that property taxes should be lower because the house might assess for a lower price. So the value of that home. So this is option number 2. So, you know, your new payment's $1,323. So you subtract $1,323 minus your old payment of $1,984. You're gonna save, option number 2, you're gonna save $661 a month, monthly. Okay, so if you do 661 times 12 times 30 years, you're talking about $237,000 in savings. Okay, so, and what does option number 3 look like? Option number 3 looks like this, which is the best option. They give you a principal reduction according to current market value. Okay, so current market value is, let's say at the time you had owed 250, your house might have been worth 275, because now because of this coronavirus, you know, prices have went down, right? So it's, you know, just like prices go down, right? Because everything looks fine, but then all of a sudden the market crashes. So you have a market crash, you know, everything goes down, right? So your new property value is, let's say the house is worth $165,000. And they say, okay, well, we're going to give you a new loan of $165,000 with the 3% rates. Now the rates, like I said, it might be lower than 3%. I'm just giving you an estimate. So your new payment is $695 with principal and interest. Now, obviously, we have to add the escrow, $565, which could be a lot lower than $565 because the property needs to get reassessed. So we add that. Your new payment is $1,260. Okay, so 165, 3%, 695 plus 565, $1,260. You know, compared to your payment of $1,984, so that's a $724 savings a month, guys, a month. Okay, so if you're saving, you know, $724 a month, you multiply that by a year, by 30 years, this loan has a savings of $260,000. Okay, savings. So that's what you're going to save, $260,000. Okay, so you're going to save this every month by calling us. So like I said, the number for you guys to call to start your loan modification is 773-847-2200. And we're helping people throughout the USA. If you're in the United States, you guys got to call this number to participate in the program to modify your home. This is option 1. This is option 2. Okay, right here, option number 2. And this is option 3. Obviously, we want option 3. Okay, and that's why we got to fight your case. Option 3 gives you a principal reduction on the home. So we reduce the principal of the home to current market value of 165, not 275. So literally, houses are going to be half off because of this depression. There will be food shortages. That's why I've been helping people in loan modifications for the last 10 years. And it's only going to get worse, guys. I mean, the housing market is totally inflated. So this has to happen. They have to give principal reductions. Option 1 is great. Option 2 is great too. But we have to do option 3, and that's why we want your business. We want your business to help you qualify for option number 3. Now, this is not based on a home of 275, but it depends what the current market value is. See, you're thinking your house is worth what today's price is, but we don't know what the future is going to bring. We have an idea, and we know that we're in a depression. So you guys have to jump on the loan modification. 773-847-2200. This is Ross Garcia with the Loan Modification Clinic.